It is chop season for Bitcoin, guys. If we take a look at the Bitcoin chart, we've just been bouncing around these levels for the entire weekend. Taking a look at the 1 hour chart here, what do we see? We're literally stuck between 95.7K to 97.3K in a very tight range. Now, usually when we're in a tight range like this, the price of Bitcoin breaks out massively in either direction. So if we are to have a move to the upside here, it should bring us all the way up to at least $100,000 in my opinion. But if we are to have a move to the downside, my lower target would be around this area first, right above $94,000, and then targeting the range lows if this doesn't hold as support to about 91.5K. So it should be interesting to see what Bitcoin is going to do in the upcoming days. Obviously, no one knows the exact answer to that, but if we are to break the 100K region, my next target, which hasn't been tested, would be $102,000, but really only time will tell, and I do think that we will have a volatile week for Bitcoin. As I talked about in my previous video, since we were below the 100K region, I was favoring shorts. But if we take a look at the daily time frame, it appears that Bitcoin is trying to hold this 96K level as support. And so I would start to consider a long should we see a little bit of a reversal here to the price of Bitcoin, with the first take profit being around 99.2K and the second take profit just above $102,000. If you want to trade with me on weeks, make sure to click the first link in my description. It'll bring you directly to this landing page where you can see you can earn a $30,000 bonus, and you also get 50% off all of your trading fees just for trading as you normally would. So these are the current levels that I'm looking at for Bitcoin in terms of short-term trading. Now, something I wanted to address is this chart. Over the past 3 weeks, over $47 billion has been wiped out from the meme coin space. $47 billion. And this is why if you are trading meme coins, you do need to really be in and out. These are not long-term positions, in my opinion. Now, something else I wanted to show you is that the Coinbase App Store position hit 174, continuing to go lower. Now, what does this mean? Basically, it shows that there's very little new money and retail participants are no longer really joining. This is quick to shoot up whenever Bitcoin trades above $100,000, as we've been seeing, and alts are doing well. I've noticed personally that it's very specific to when alts are doing well. But obviously, that's not the case here, which adds on the bad sentiment there already is. This is mostly a lagging indicator, but still valuable to watch in case it were to skyrocket to a high position again, because generally the market is getting pretty frothy, locally topish when this hits the top 10. And I would tend to agree with this assessment. Usually when the Coinbase app position skyrockets, it's a good time for you to take some profits off of any of your positions. At least that's what I've been doing this bull market cycle. And something else to do with retail here that I wanted to show you is taking a look at the social risk. Now, historically, the social risk is pretty accurate in predicting the bull market top, because it basically tells you that all of the exchanges, influencers, layer ones are gaining a ton of followers, meaning that there are more and more entrants into the space and the market is about to top out. Now, typically, we also see altcoins run really hard when the social risk is high, because naturally a lot of people are paying attention to altcoins. That's when we have new money and new entrants in the market. But as we can see here, the social risk is still going down, meaning there aren't new people entering the market, and the overall attention across social media is not on crypto, which is a good sign to actually be accumulating cryptocurrencies, because normally you don't want to be accumulating when the social risk is this high, because the market could be topping. So this is definitely a metric that you need to consider when it comes to when you should be exiting the market. And as we discussed, the market is very frothy at the moment. A lot of traders are getting stopped out. This is a very difficult environment to be trading, and so I would highly recommend that you're not using a lot of leverage in these market conditions, because it can be tricky. And as you know, the market makers are out to get us. Now, I want to share with you a couple of Bitcoin charts that are very important in my opinion. We saw that last year, after the Bitcoin ETF was approved, Bitcoin consolidated between $50,000 to $70,000 for around 8 months before making its next move higher. Now, we've addressed this in some of my earlier videos, and I don't think this will be the case this time around, but it wouldn't surprise me if after a historic milestone like Trump winning the election, the first pro-crypto president, we don't chop around for a bit. I mean, why wouldn't we? Bitcoin needs to consolidate before its next leg higher, so you need to consider this. I still think that the bull market top is nowhere near in, and we could just chop around for a little while longer. Now, this isn't the best scenario for altcoins, but it's something we need to accept because Bitcoin tends to take its time before it moves higher. It can't just go up all the way in a straight line, but when it does go up, it goes up quick, so remember that. And taking a look at the total crypto market cap, what we can see here is that we've kind of just been bouncing around the $3 trillion to $3.64 trillion level, and now it looks like we could be coming down and trying to hold it as support. As we can see, we've been bouncing between this range since all the way back November 18th. But ultimately, I think it's inevitable that we see something like this. We just need to consolidate a little bit longer before Bitcoin and the rest of the crypto market can continue to move on higher. And it's very much the same case for the cryptocurrencies outside of the top 10. We're coming back down to this support box, which is between 190 billion all the way up to 250 billion. Now, I know this is a pretty big region, but we tested it last year before moving higher. As we can see now, this test is ongoing before we move on higher. Same scenario, in my opinion. We will break up above here. We will likely have to consolidate there as well because this is a tricky area to get past considering the previous bull market top. But the end scenario, in my opinion, once we consolidate in this upper range, will be to move on much higher for the cryptocurrencies outside of the top 10. And in the meantime, of course, Michael Saylor tweeted this. Whenever he shares this chart showing when MicroStrategy, or strategy I should say, are accumulating Bitcoin, he typically buys it the next week. So I wouldn't be surprised if he announces that he bought some more Bitcoin this week. And that sums up today's quick video. I know it was quite generic, just showing you what Bitcoin is currently doing and what the total crypto market cap is currently doing. But the reality is we've just been chopping around, and so there's not that much more information to share. To summarize in one sentence, we are right where we need to be in this bull market cycle, and we are gearing up for the next leg higher. If you enjoyed this quick update, make sure to smash that like button and subscribe. I'll see you in tomorrow's video.